Well, hello and good morning, everyone. Welcome back to Man and Machine. We are here for episode number 123, episode 123 here. Good morning, Ben. Good morning, Mark. How we doing, gentlemen?
We're doing all right. We are doing.
We're doing good morning. It's a calm morning out here. Futures are like moving like single-digit points.
Don't say that because calm makes me I get uneasy when we're calm right now, truthfully.
You got a little PTSD from the last couple of weeks?
Yeah. Well, look, I encourage. Let's talk about it. So what? We can get right into it. Market's been crazy. We have a lot to talk about today. We are talking, of course, stocks in real life. We got a good one, an active one that I've been trading. We'll be talking about Pepsi today, and we're going to be learning a little something with Mark, of course. Ben, if we want, we could take a quick look at our PeakBot picks, being that we are back in the game again this week, having taken a week off due to heightened volatility, not loving the watch list, truthfully.
The watch list was kind of opposite of what my thought of where the market was going. So I personally sat out my spreads last week, and I only took 2 positions so far this week. Maybe I'll get into a third, but we'll have to see. But keeping it small until we kind of choose a side here.
Okay. Yep. I like to hear it. So we'll certainly take a look at the market. We'll talk about a couple of our strategies and much more. Before we get into all the good stuff, anybody do anything fun this weekend? Again, weather was kind of like weird here in the Northeast, but did anybody enjoy any good meals or anything good while we get a lot of people joining in here over the next minute?
Got a round of golfing.
Yeah.
Happy about that.
That's a W.
Yeah.
And did you break 90, not to put you on the spot?
I hit 90. Second time out this season, so I'm happy with it.
Well, that's bogey golf, man. We're pumped about that. Mark, we will get you in the golf game. We will eventually.
I did have 1 birdie during the round. That made the round. Yeah.
Awesome. Mark, not a golfer. We've gone over this, I think, live on air maybe a few times.
Yeah, not a golfer. I do get a lot of pressure to play. I'm more of a tennis guy. I might be on the courts if I'm at the club.
All right. So I got a just my backhand. I'm always spinning. I can't get a good 2-hand backhand together. So that's my weakness if we ever play. Have you given into pickleball?
I've not given into pickleball.
Okay. Strictly because of the name, right?
Multiple reasons, name being one of them.
Yeah. Gotcha. Don't give in, because once you do, there's no getting out. All right. But we can, I am excited for the day when we can talk about a publicly traded pickleball company, and I don't think we're far from it, truthfully. But anyway, let's get into the show. Ben, why don't we just quickly give your PeakBot picks from last week and see what you got open, and then I'll do the same, and then we'll get right into it.
All right. Let's do it.
All right. So go for it, man.
I am zooming in here. So on Friday, I set up trades for NVIDIA, Shopify, Palantir. 2 out of those 3 filled, and I think I'm going to keep it that way. I think it's just NVIDIA and Shopify that filled. Take a look at my account. Yeah, NVIDIA, Shopify. Both of those filled. It looks like I got about $15 in premium for NVIDIA, which was great because at the time of the trade, it was trading around a 15 delta. That's kind of my rule of thumb right now, is I want that many pennies as whatever delta I'm trading for these tighter spreads to kind of give myself the best expected value that I can get, which is difficult to find on the watch list. And when we make our edits to the trend spread bot and the watch list that accompanies it, all of the bot's going to do all of that in calculations for you. And then on Shopify, I made about $20 on a dollar spread. So both of these are dollar spreads. So I got about $200 at risk, $35 in premium. Same principle with Shopify. It was trading around 20 delta. I was able to pick up 20 cents for it.
Ben, I got a question for you, because I love that approach of where you're making sure you're collecting enough premium based on the delta selected, etc. On the watch list, hard to find those in the low risk category or the low volatility category, I would imagine. Are you seeing more moderate to high risk?
Yes, definitely moderate.
Yeah.
Definitely moderate to high. Yeah, for the lower risk, if I was to trade the lower risk, I would probably take the approach of I'm gonna sell a spread here, but if I get a sign, I'll probably just wheel it.
Yep. Okay. Which you've been doing as of late. What are you doing with this one? Zoom in a little bit. What are you doing with this one Ford share here?
Support American vehicles.
Nice. That's new to the portfolio, man. Hey, good luck on that one. All right. I haven't seen that one yet. Thanks for letting me know about that.
Truthfully, I just have it there because over the weekend I do some testing with the Tradier's API, and if I happen to not have any positions over the weekend, I'll at least have Ford in there, so I get some sort of data back.
Gotcha. Is Ford your default test one
for everything?
equity? Yeah. That is hilarious.
Yeah. Hey, I'm winning on it. 4.2% gain right now.
That's awesome. All right. So right now you filled on 2. I don't see any orders for your Palantir, so maybe you'll test the market again today if you take a look at the watch list. But okay, very cool. Let me get mine out of the way. And I did want to talk about it briefly, and we'll discuss this more next week. But I also have a King Condor position open on my Tradier account here. So my 3 PeakBot picks for the week, not proud of it, but I did like the setup on GameStop. So I'm bullish on GameStop this week for $11 in premium. It's a $1.50 spread. I'm trying to stay above 25.5. And then I'm bearish on Love and NEE, which is Next Era Energy or something like that. And of course, Love is, I think, Southwest. So didn't collect a whole lot in premium this week. I'm okay with that, making about $30, dishing out 500, 550. So light week for me, but I felt really good about all 3 of them. Here's the positions. We're currently out of the money. We'll see if I can have trend spread take profit for any of these early in the week. I'm still holding my Walmart shares. I own these at 98 a share. So if you guys remember, I was really down in the dumps on this one. Walmart was trading about like $82, $83 a share a few weeks ago. So nice recovery there. And then my King Condor position, which is open expiring today, currently out of the money. Ben, you might have marked the strikes on this. I don't have them marked. If you want to dive deeper, we can. If not, no worries. But note that the King Condor, Ben, 2 or 3 wins last week, I think. 2,
traded twice, won twice. Good week for the King last week. And again, with those volatility metrics that we've got built into it, it's just not going to trade on those more volatile days.
Yep. So you can see, again, 2 for 2 this past week. I have a sold put at 445 and a sold call at 580. So trying to stay in between those 2 numbers here today on SPX to take home about, I didn't do the math yet, but maybe 200, 300 in premium. So
around 250, if I had to guess.
Okay, cool. Awesome. So yeah, those are my positions for the week. Wishing all of us the best of luck in the PeakBot Picks competition. I think we transition into stocks in real life. In fact, Pepsi was one of my last wins in the PeakBot Picks competition 2 weeks ago. I was bearish on them, and I've been bearish on Pepsi for a little while now. But let's talk about it. I'll shut up. I've been talking too much.
Well, I don't know if you guys remember this, but just last week we talked about Coca-Cola. So sure, there's obviously the Pepsi Coca-Cola debate.
Yeah.
Do you guys remember, and I don't know how prominent this was throughout wherever you guys were at this time, but probably about 15 years ago, everywhere that I went, whether it was a fair or something like a live event that you would go to, there was always a Pepsi stand that was comparing Pepsi to Coke. And they would give you free shots of Pepsi and a free shot of Coke, and you had to guess which was which. And if you guessed it right, you would win a free bottle of Pepsi.
Wow. I never ran into that.
You never ran into that?
Mark, did you? Have you ever seen that?
Yeah. I think they had a whole like marketing push behind it. It was the Pepsi challenge. And they've been somewhat criticized for it because Pepsi is a sweeter beverage. And so naturally, in like an initial blind tasting, you're going to be inclined towards the sweeter, richer drink. So if you're only served half an ounce or an ounce of something, Pepsi kind of has an edge in that one-off situation.
Okay, that's fair. Are you guys, do you prefer, before we even get into the Pepsi versus Coke, do you guys, if you're drinking soda, prefer the full-on Pepsi or Coke or the diet or something else? I am not drawn to the sweetness. Like, I cannot believe people drink real Pepsi or real Coke, truthfully. Where do you guys lie on that?
I don't even remember what Pepsi tastes like, honestly. I don't drink soda.
Okay.
But whenever I did drink Pepsi, it would be like when we were in high school going to Taco Bell, because Yum brand doesn't contract with Coca-Cola. They contract with Pepsi.
Isn't McDonald's Pepsi?
No, McDonald's.
Oh, no, it's the other way around. It's the other way around. Okay, I'm sorry.
Very famously, their special formula for Coca-Cola.
Right. Okay, that's true. I got messed up, and I think I've mentioned this in the past, but I think I was at University of Maryland has the only McDonald's in the world, or maybe the country, that serves Pepsi because of the contract with the university.
Oh, wow.
Right. So, hey, if McDonald's wants on campus, that's fine, but this is a Pepsi campus. That's interesting. I don't know about all that, but anyway. Mark, are you a Pepsi guy at all?
Not really, but I will say my fondest memory, maybe it wasn't so fond, but my most poignant memory of Pepsi was, do you guys remember the Big Slams that they had? That Shaq came out and he was advertising the Big Slam. It was like a 20-ounce product. I mean, this was in the mid-90s before like everything was 20 ounce. But it's probably bigger than 20 ounce. Maybe it was 32, whatever it was. The Big Slams came out, and I really, like, we had this school like picnic field day kind of thing. And I was like, Mom, I want a Big Slam. Give me a Big Slam of Pepsi for this thing. And she has no idea. We didn't drink that much soda in the house. And she returned with a 2-liter bottle of Pepsi. So for my individual consumption, I put down an entire 2-liter bottle of Pepsi at Farmingville Elementary School's field day. Didn't end well.
Incredible, dude.
I can imagine. I can also imagine what all the teachers there thought. You being sent to school with a 2-liter bottle of Pepsi.
Just a completely wired 10-year-old. That's exactly what everyone wants.
That's a teacher's nightmare right there. You were all jacked up on the pee. All right. So not a Pepsi guy. If I'm going to drink a soda, it's going to be a Diet Coke, or maybe actually Pepsi owns Dr. Pepper, or Coke does?
Yep.
Pepsi does.
Doug, my realized ball was also very high.
Doug, thank you for shooting it. If I'm not going crazy, Pepsi does own Dr. Pepper, right?
Yes, I believe so.
Yeah.
Okay. Look.
Actually, Keurig owns Dr. Pepper, right?
Okay, I thought Pepsi was somehow associated with.
I might be completely off on that.
No, you're right. It is Keurig. Keurig, Dr. Pepper.
Wow. Really? I didn't know that.
2018.
Okay. All right. Interesting. Do you guys have a guess? And I'm looking this up here now for IPO.
For Pepsi?
Yeah.
Oh, man. Well, Coke was definitely around before Pepsi. I'm going to guess the 50s.
I truly don't know. I'm really shooting in the dark here. I'm going to go 1974.
Not far. Now, I'm seeing a couple dates here, but I'm seeing January 13th, 1978 is when they IPO'd. I'm seeing something else with Pepsi Cola and Frito-Lay went public, I guess, collectively in 1965, but maybe that was Frito-Lay more so. I'm not sure, but I'm seeing 1978 here. That's a fun chart. Okay, so let's get into the stock itself. Mark, I would imagine that you've had your fun with this stock. Maybe not. Is this as popular as I hope it would be in the days where you were really trading heavily, or what?
I don't remember trading as much as a market maker, to be honest. The options volume's there, right? It's in my top 250. I think we're getting like in the 30s per day. Maybe it's only in the 20s these days. But where I tend to see it now more is like from an advisory perspective is like Pepsi is going to kind of fit in sort of what we talked about last week in the same type of, consumer cyclical, like relatively high dividend yield, like, in this time of tariffs, it's kind of in a somewhat different position than call it the rest of your tech basket that's dominating the S&P. So I tend to see this more as, people doing cover calls, overwrites, long holders that want to kind of use options to a little bit adjust their outcomes on this. So that's more of my trading experience with Pepsi has been recently.
Excellent. Okay. Very cool. And I know we were, you might have even sent something over prior to the show, Mark, about something with their dividend or recently some record setting info there. What was that? Am I getting all mixed up, or was that Pepsi?
Yeah. Well, so if you look at the chart, like this past year has been a little bit tough. It's zagged somewhat depending on the tariff conversation. But because of this fall in the stock, I think we've gone from like 190 down to like 130. So a pretty healthy, drop there. But their dividends remain consistent. And in fact, they have a long history. I believe they even count as a dividend champion in terms of consistently increasing their dividends. So, while we're probably at like 2.5% at the beginning of the year, now you've got a stock that's, down a bit, if you still think it's a solid company, is also paying a significantly higher dividend yield. And with this drop, we've seen a little bit of implied vol spike too. So that combination of higher implied vol, solid dividend yield is something that I've seen perk up, in some of the covered call, cash put type screeners.
This is interesting. We're approaching a 5-year low here, and with dividends increasing, this might be a really interesting value play long term, especially with those dividend payouts.
And that's exactly the thesis, right? That with a continually increasing dividend, structurally their business is, I'm not a fundamental analyst, but I think it's got potential for that rebound play. And the higher implied vol, right, makes, leaning into a wheel or that type of strategy. If you like the equity, there's some interesting long delta things you can do with options here.
Yeah, I'm actually really liking this. I might sell some puts on it. See if I get assigned.
If you like the dividend, though, what I would suggest doing is something almost more like getting long the equity and protect it with some sort of collar, especially to capture that dividend, get a little premium from the upside that you can sell, maybe use that to buy protection, below some of these levels, like a put spread collar could be pretty interesting here to capture dividend, capture upside, use the implied vol to finance protection.
Dillon, you're on mute.
That's on me. Brutal. There should be a fine jar for that. So I like that we're putting together a trade idea, truthfully, around this. I'm not saying we need to do this every show. I'd be curious to see if we were to build out that trade right now or something similar to what Mark was just mentioning, what's available. But we don't need to dive that deeply. But I do think, and if you're watching right now, if that's helpful, maybe that's something we can focus more on. But
yeah, could be weird with the pricing now pre-market, but
it's true. It's true.
If I do take a trade, then I will let you know.
Okay. By the way, Mark, go ahead. Sorry.
I said I'll post it.
Okay.
53. I can show you a chart of sort of where some of the covered call pricing has been in this. That's kind of interesting.
Yeah.
We see that implied vol reflected here, that increasing implied vol reflected here. So here, I'll zoom in a little bit more recently, but here we have the stock in yellow, and you see in green, this is the price of the 30 delta covered call at 30 days. And so this is normalized to consistently 30 delta, consistently 30 days out. And over the month of April, really all year, we see these prices continue to increase as a percentage of the stock price. So Today you're collecting almost 1.5%, 1.4% of the stock price. I should say on Friday you were, whereas that's, call it 60% more than you were in late February. So that premium is definitely, a higher covered call price gives you both kind of more upside potential if you want to target the same amount of collection to finance potentially a put spread, but it also could give you either higher premiums or more distance out of the money. So definitely an interesting target here, of course, if you believe in the fundamentals of Pepsi.
Yep. And I'm taking a look at this, some of the info you sent over. 53 straight years of dividend increases. That's fun. Dividend yield around 4%, one of the highest in the company's history. So interesting. A lot to look at. You have Ben scratching his head on maybe a long position with some protection on Pepsi. We'll see how that goes. I've been trading it short term on the trend spread watch list. Not a ton, but I've taken about 4 or 5 credit spreads on it over the last 6 months. I'm a winner on it. They were all call spreads. So 70 TE call credit spreads, collecting probably somewhere between $20 to $40 in premium, grabbing between the 20 and the 30 delta. So victorious on the downfall, not much, but making some cash while Pepsi's falling here. But we'll see. I was going to take a closer look off air on their fundamentals and the technical analysis and everything else. But what else do we have to say on Pepsi, fellas?
I'm just looking at some pricing for like sort of that put spread collar that I mentioned, for example. And if stock's trading, I see, pre-market, we're actually pretty close to where we closed, like 134, call it 133.5. You can buy, going out 30 days, end of May, you can buy the 130, 125 put spread. So you're protected for the first, or not exactly the first, but like for about $5 more downside. And that gives you all the way up to 139 that you can sell on the call. So you can have from 133 to 139 upside, 130 to 125 protected, all for roughly even. So, give yourself some protection on the downside, let this run a little bit. I don't believe we have a dividend between now and May, but you push this out longer, you can capture the dividend. The price is going to look relatively similar. So definitely, if you're a buyer of Pepsi, an interesting time given higher dividend yield and the options setup, I'd say.
Excellent. Yeah, I like this one. There's some opportunity here, reaching the 5-year low, as I mentioned earlier.
Just out of curiosity, I actually set up a synthetic long with a put collar on my Tradier account. I mean, the prices aren't going to be right. So the credit at 27 cents might not be accurate, but we've got the synthetic long at the 133 strike, protective put at 125, and then selling a call at 136. So there's about $3 of upside there with $8 of downside protection, and you're getting a credit off of it. And this would expire before the dividend. So yeah, if there was the dividend then within this expiration, then that price would get baked in as well. Interesting stuff to think about.
Like we needed more stuff to think about, Thanks a lot.
Looks like the next dividend, early June. So
yeah.
Early June. Okay, cool. Well, I think that does it for Pepsi. I won't be drinking anytime soon. I'll probably be at a kid's pizza party in the next few years, and that's all they have, and I'll have it. And we'll just move on. But all right, let's get into learning a little something with Mark here, and we'll get the screen going.
I will say that going forward, we're going to try something new out for this learning segment where we're going to highlight some of our bots and walk through some of the back tests, some of the data from the back tests. We might spend several weeks on one bot, just dissecting it and getting to know the ins and outs of it. So starting next week, we're going to talk about PeakBot's King Condor, which Dillon mentioned earlier. 2 nice wins last week. It has parameters in it to turn off if the VIX is too high or the VIX moves in a certain direction overnight. So we will cover all of those details on the King Condor starting next week. And then going forward, like I said, we'll dissect our bots. And as we release more bots with Mark for Harvested Financial, we'll be able to highlight those as well. So I think this will be the last week with this learning format. And then next week, we'll be getting into learning directly about our strategies and the bots that we've developed to trade those strategies. So make sure you tune in next week. Things are going to get really fun as we talk about those strategies. But for now, Mark, why don't we cover delta as probability of profit?
Sure. So delta, probably one of the most important Greeks out there. I don't want to say the most important, because when you're trading options, you're trading vol, and Vega is, arguably up there too. But really, delta, I think, for most traders, most buy-side traders, is really important to understand from a couple different senses. It can be the hedge ratio. Which these all sort of tie in together, but I should say that this implied delta value has a couple different use cases. So as a hedge ratio, which is also a probability of that option landing in the money at expiration. So, a lot of times that's also phrased as the probability of profit. Not exactly all the time, because it's closer to landing in the money, but as a shorthand for developing strategies, POP is very useful because you want to understand, how meaty of an option I'm trading and how I can compare that across, strategies for consistency, but also different underlyings for understanding where delta is struck. So basic 101, delta, of course, measures how much the option's value changes for a $1 move in the stock price. But that also starts to allow for a probability measure, meaning that that hedge ratio, that adjustment, if you're short a 30 delta option, to be completely hedged, you might want to be long 30 deltas of stock. But that also, you hedge at that ratio because that is the chance that the option will end up landing in the money. And so, of course, delta will change with gamma over time. But understanding that 30% probability is also a really good way of targeting strike setups. So as we actually saw earlier with that Pepsi example, the reason I track the 30 delta example there for my covered calls and cash puts is because, first of all, I really like that 30 delta for strategies. I think that's a good, I'd say, somewhere between 20 and 30 delta for overwrites is my target range. And I think, depending on your term, of course, and how aggressive you want to be with premium, that's kind of a good balance between collecting a little bit of premium and, having, not necessarily getting assigned every time. So using this as a rough estimate of your chance that your option will expire in the money. It's not necessarily the chance that it will touch that strike. Your touch probability is probably roughly double your delta. So throughout the course of a trade, you will go through that delta more likely than not. 30 delta has a 60% chance of touch. So it's actually important that this is your delta at expiration. So the chance that that strike will land in the money at expiration. So we define the at the money, of course, by the 50 delta. That's not always exactly where stock price might be. That'll, of course, move by interest rates or dividends. But it's a really good kind of standardized metric to say, what is the chance that this option lands in the money? I'm consistently going at a specific, kind of vol standardized level away from the current stock price. And it kind of gives a really good center to, develop strategies around. So when I'm always looking at a stock, well, percent out of the money helps kind of, you can think about that in terms of how much space you have. Delta is usually my first key of what's the 25 delta strike, what's the 30 delta strike worth, and how far out of the money that is. So really good normalizer for developing strategies. And I'd say one of the first things, if you're going to look at any of the Greeks, you should take a look at delta.
I love hearing that you favor the 20 to 30 delta. You say it exactly right? You're still giving yourself about a 70 to 80% chance, at least statistically speaking, of avoiding assignment while still collecting a good bit of premium. That's where our bots lie, a lot of them, between the 20 and 30 deltas. So incredibly helpful. Ben, do you have any thoughts on delta here or pop?
I mean, everything Mark said very well. And yes, the 20 to 30 delta range is where we like to typically automate with. Some of our bots go outside of that range, but most of them, at least the core strategy, are right there. I like it as a very quick metric to kind of determine what my chances of winning are. Like that's how I mainly think about it. I mean, we see the exact definition of what delta is. You know, the X percent movement for every dollar stock move. So it's very, very helpful tool. It is like the basis of all of our bots. So very, very useful, important Greek, in my opinion.
Yeah, absolutely. So love it. Love delta, love pop. You can find those on our watch list for all of our strategies. Let's talk about, again, next week, we're going to be diving more into our strategies. King Condor first up on the docket. Newer strategy, has had some recent success. We have some risk management tools automatically built in to avoid trades that where the market is, seeing heightened volatility, etc. So all the details on our King Condor strategy are available on our website at PeakBot.com. Ben, I'm not sure. I see you looking at it backstage. I wasn't sure if you were going to pull it up, but here it is. Again, everything is here. Only trades SPX, one DTE strategy, selling condors here. So ton of information. Just head on over to peakbot.com, but we will be diving into this maybe even over a couple weeks. And yeah, a lot of great back tested data. Hard to argue with that equity curve. Again, it's only back tests, but we've been trading it live now for, we've been trading it for a couple months, but with the new risk management built in, I'd say a couple weeks. So fantastic. What about a look at, first of all, has anything else happened in the market, pre-market, since we started the call? Or are we still calm-ish?
We can check futures. Mark, do you have it up?
We look pretty, we're actually positive. I think we were down 6 to start the show, and I see us +3 on the S&P. So pretty tight range here still this morning. But actually, Doug has a good question here about the difference between an options delta and an overall position delta. And I think this is particularly important for, any of us, buy side retail traders, that the way we sort of talked about it abstractly here is, what is the delta of a given option? So, excuse me, what does the 139 strike in Pepsi look like? Or what does the 570 strike in SPY look like? So when you're setting up a trade, you're picking those strikes for that specific, structure based on the individual deltas of those options. But really what that creates, and especially what that creates over time, is a position delta. And if you're a overwriter, if you have any underlying positions in the market, understanding what your overall position delta is going to be pretty material to your P&L. So if we take the covered call example, one of the interesting counterfactuals to think about if you're writing calls against a position is, if I own 100 shares of Pepsi and I sell the 30 delta call, I'm really only effectively long 70 deltas. And as that stock moves, I'm going to have greater and less delta positions over time, because my 100 deltas from stock is going to stay unchanged. But as time passes, my options are decaying. As stock goes down, my deltas in my short call are going to get lower. As stock goes up, they're going to get higher. So I might have 70 deltas right now at the time of trade, but stock goes down in Pepsi. If I'm short a call, I'm going to have more deltas on the downside. Eventually that, short call is going to offset fewer and fewer of my underlying shares. And conversely, on the upside, as we go through that strike, it's going to start offsetting everything. So understanding how that position delta, even in just a simple covered call, changes over time is going to be really important. You might even look at your overall position delta from how many shares of, SPY or VOO do I own in my retirement account, and what am I doing with some of my options positions to hedge this overall. So understanding what your overall delta is, maybe possibly even normalizing it into the SPX. And that could be a whole other conversation about beta deltas and, vol dollar deltas. But what your overall position delta looks like is going to be pretty different and particularly, evolve over time. So yeah, this is a good summary, Doug. I like that an option delta on a specific strike, that's a probability. That's, the pricing of that specific security, whereas your position delta is going to be much more about, how your P&L is going to look as the market moves overall.
Awesome.
I don't know what we would do without Doug here. I'm not even being sarcastic. I'm thinking he needs to come on the show. I don't know if
I love that Doug is on YouTube as well, because we've got, it looks like 775-ish viewers right now, and they're all on X, and it's just Doug and one other person on YouTube.
I love it. Applause for Doug. Doug, let us know, as long as you know. I'm not sure if I've chatted with Doug outside of the show. I think I have, if he's been a subscriber for some time. Doug, as long as you're not a psycho, man, I think maybe you come up on the show and we have some fun here and talk shop. You're always a fantastic addition to our show, so thank you. Guys, we want to talk about economic events. Ben, you got anything coming up here?
I've got the calendar up right now. We can pull it up. Just briefly talk about what we've got going on this week. So today, really not much.
Okay.
So I don't hate that, especially with King Condor running through the end of the day today. Hopefully we get a nice smooth day, although I just jinxed us. So
yeah.
beware.
Just the facts here.
Yeah, tomorrow we've got some pre-market data. We've got job openings data at 10 a.m., which I'm never a fan of 10 a.m. data. Yep. I just feel like 10 a.m. is when things should start to, settle down. And then when there's big data at 10 a.m., it just causes chaos.
It causes a jolt.
In this case, it'll cause a jolt. That's for sure.
Hey.
Wednesday, a bunch of pre-market data. GDP and PCE data at 10 a.m. Again, 10 a.m. data. Not loving it. Quick note for Wednesday, if you are a Max subscriber, Max's 0DTE org bot is going back on the market on Wednesday. We are ready to rock and roll with increased risk parameters and adjustments, and we're ready to turn that bot back on. So if you are a Max subscriber, 0DTE Orb will be available again starting Wednesday. And then moving into Thursday, more 10 o'clock data. We get the Fed balance sheet after the market closes, so don't be worried about that during the market. Then Friday, we got non-farm payrolls and unemployment rate. And you know what? I was actually doing an economic analysis for one of our bots that were in the background building. And non-farm payrolls was an event that for some reason, it's just blowing out these spreads.
Really?
Yeah. I don't know if it's just happenstance that that the days that non-farm payroll data is released, that the bot just loses. But it was like 20 something different events over the back test period where non-farm payroll took place. I think the bot only won twice out of all of those. So for that particular bot, at least, it won't be trading when non-farm payrolls are.
What kind of a setup? High level? Which bot are you talking about? Is it a Condor setup?
No, it's a 0DTE spread, and if the price moves against you, there'll be a hedging spread set up.
Okay.
And it'll be close to the money, calls or puts. So I'm excited for that bot. But yeah,
Mark, anything with non-farm payrolls that ruin your day or make your day in the past, or no?
No. I'm honestly these days I'm not sure what macro indicator everyone's going to jump on. It feels like a dice roll, and as we've said in past weeks, it's almost like we should be checking Trump's golf schedule instead of what the what the indicators are.
Which we are. We legitimately have some bots in the marketplace that are checking for Trump's schedule. So, all right.
So that's really it for Friday. That's what's notable: unemployment and non-farm. So really nothing this week for me personally where I'm like must shut off the bot. Probably just gonna keep calm and Condor on, even though I'm just trading Condors. What do we have for earnings this week? Any big names?
Let's see.
I think we have Meta on Tuesday or Wednesday, Apple, Microsoft later this week.
The big ones.
Yeah, we have a couple big. I forget the exact days of everything.
Let's see. I'm pulling up the detailed trend spread watch list to see what is
Facebook and Microsoft are Wednesday, and Apple and Amazon are Thursday.
Uber coming up this week as well, or no, maybe the next week, the 2nd. Is that Friday? Yeah. Uber on Friday. Oxy. Disney coming up.
I think we mentioned it last week with regards to dispersion, but I think in particular this week, I think trading or during earnings in general and during earnings with this macro backdrop, it's important to kind of differentiate strategies based on whether you're trading individual equities versus indices. And, there will always require a little bit of nuance between them, but particularly this week, I think we're going to see some real zags from some of these companies, being like the first major earnings report after tariffs and yada yada. So I think there's potential for some outsized earnings moves, but then on the individual space. But then, from a broader market, obviously we could see a bad earnings zag the market, but I'm paying attention to some of the vol indicators out here with regards to the overall macro, whether you're trading SPX, QQQ, something like that, a morning like this where it's incredibly calm, we to see the VIX coming in, we start to see some of that contango come in, and you start to go, hey, are we reverting to a normal vol environment? On the other hand, something could always shift. And I think, if we've learned anything over the past 2 months, that things are liable to shift. So that's the way I'm playing the macro market and, treading carefully around earnings with individual names.
I mean, this feels like the week for earnings. Am I wrong? Like this is ridiculous. How many?
We're in the heart of it.
Mm-hmm.
Yeah, this is it. I mean, the list just keeps going. Obviously, here on the watch list, we've seen some of the big ones come through. Obviously, some of the cheaper stocks as well. But yeah, it doesn't end. And you can always find this on our watch list. Again, this data is going to refresh when the market opens here in just about 15 minutes. But this column right here shows the earnings date. Okay. So I was a jerk in looking at the expiration date for these contracts for a lot of them, but you can see anything highlighted in red is reporting earnings in the next 10 days. So awesome. Okay. Really quickly, need to mention big promotion, big deal that we've got going on here exclusively with Tradier. If you're new to Tradier, you can get 6 free months of PeakBot's Pro subscription. Okay, so that's access to all of our core strategies as well as exclusive bots only on our Pro subscription. Okay, so not only do you get 6 months of PeakBot for free, okay, never been an easier way to get into automated trading, but Tradier is the brokerage to do it with because you're also getting 6 months of commission-free options trading as well. You're getting Tradier Pro, which is normally $10 a month, thrown into this deal here. Okay, so pay nothing on individual underlying options trades. Okay, very heavily reduced on SPX, etc. Okay, so grab that coupon code or the Pro Q. What is it called again? What is the
QR code?
QR code. I'm so sorry. That was a brain fart. Grab the QR code or just go to peakbot.com/Tradier. I'm going to get that up on the screen here in just a second. But anyway, now it's overriding. But peakbot.com/Tradier or grab the QR code for 6 free months of PeakBot Pro commission-free options trading, and what has it been? It's about a 40% discount for life moving forward on our pro subscription. Okay.
Yep.
So let us know if you have any questions. You can always use the chat feature in the corner of our website at peakbot.com. But head on over, create your Tradier account, fund it with $5,000. That's the catch. That's the fine print. It's got to be a 5K account. That's it. Let us know if you have questions. So other than that, guys, I think we're good to go here. Excited to tune in again next week for us to take a deeper dive on our King Condor strategy, and soon to be some more bots that we're going to be rolling out here with Mark and Harvested, etc. So, guys, anything else before we head on out of here?
No.
Happy trading.
Well, best of luck to everybody today. Enjoy your Pepsis if you're drinking one, and maybe go long on it. Not financial advice. Thank you so much. And as always, we'll see you at the peak. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.